Good morning, gang. Good morning. Welcome back to this week's Bitcoin update. First and foremost, remember, nothing discussed today is financial advice. I'm not a financial advisor. This is just for educational purposes only. And now that's out of the way, let's jump into the Bitcoin chart, shall we, and talk through some zero bullshit TA. Right, so let's start how we normally do. Let's do a recap of the trades that we've taken over the past 7 days since Thursday. We'll talk through the trades that we've taken in the group, the good ones, the bad ones, and the ugly ones. And then we will move on to discussing what I'm looking for next, okay? So, first and foremost, let's start. Let's zoom in. Obviously, we all know we've had this big spike up. Obviously, on the back of the fake ETF news. Absolutely fine. And then we've come back down and now we're still hovering here, still maintaining this upward structure. So, as you guys know, if you've been watching our YouTube channel for a very long time, you'll know that this is something that we've been talking about for weeks and weeks and weeks with you guys. Okay, since the range lows back here. Okay, we're talking about this region. All right, and the region that I'm specifically talking about is this sticky zone right here. Okay, so we were saying on last week's video, if, again, big if this range low is to hold and we start to get the move up, then first and foremost, we've got the EQ and these sticky highs here. And if we get straight through that, then looking at either this sticky zone here, which once again, we'll talk through a little bit later, or coming up towards range highs. Okay, so you guys were well prepared for either option on that. If you did obviously catch that long when this range low did hold, then happy days. Obviously, I hope you locked in some profits on that quick move up. But yeah, good trades. Right, so now let's zoom in. Let's zoom into the 15-minute time frame. So if we're looking on here, we're just going to move this up. Going back to Thursday, this is where we were last week. And we're going to start off looking at Sunday night's plans for us, because effectively I'm not going to talk through some of the trades that we had within this sideways range. It was a straightforward sideways range. In fact, let's just draw this on so you guys can see clearly, and this is my thought process behind it. Let's get this to attach. And there's the lows, there's the highs. We'll throw this onto our range fib. Where are you? You're there. And there we go. We just had a nice range. So we had the low, we had the high, front run the low, test of the highs, EQs, deviation, and then continued up. So anyone that's one of our students, one of our members, knows that when we've got a range-bound environment like this and price is failing to come back into the range lows, then we can see that that's a sign of strength. Okay, so what we're doing is we're coming up, we're coming down, we're coming up, we're coming down. And again, just from straightforward market structure, you can see we're never changing any market structure. We're just continually making higher lows and higher highs. Okay, so that's not a true sideways range. That's more bullish. However, there are shorts to be had within this. Like, for example, we had a swing fairly pattern here, back down into the EQ. We didn't get the follow through to the range lows. I would have loved an opportunity to take out the liquidity from these lows for a long, but we didn't get that. Again, it's just planning. If this happens, then that. But we didn't get that. Obviously, we had more deviations, and yeah, I'm not going to talk through all the low time frame trades that we had on this. This was just what we were looking at. So Sunday, this is where I took my first loss of the week. Absolutely fine. Technically, it's last week, but still. So Sunday evening thoughts. This is when I'm coming into the group. Obviously, on a Sunday evening. This is at 20 to 7 my time. Price action just rejected from the algo, which is just here. Okay, I've taken a short. However, if we fail to break any low time frame market structure, then I'll cut it. Okay, so my thought process is we've come into this algo, we've come into the golden pocket, we've come up just above into the 707 level. We had a lot of excess up here, and at the time, I was watching this because we had 10 million worth of market longs close out at this level. Okay, so again, I'm updating the group. The guys are asking me in the group, you know, what do I need to see if I'm going to cut it early? And I'm saying to the guys in the group, talking through, again, this is all real time. I'm always talking through my thoughts in real time. If anyone asks me in the group, I will happily talk through this, and this is how you guys can learn from it. So I was going to cut it, but I'm currently still sat in it. After watching 10 million longs close out after rejection from the 707, and price action didn't drop, I was looking for another push up higher, and now this is where I'm paying attention. Pre-close session in 1 hour. Again, that's down to session time, so obviously there's 4 sessions within the day. I'm not going to go into that right now. And I'm saying, obviously, taking out Friday's highs is my invalidation, as that's a new setup idea with a potential tighter risk to reward if we get there. Okay, and obviously I've mentioned that before, that if the algo doesn't hold, I'm looking for Friday's highs. These are Friday's highs. So potentially, if we've got a swing fairly pattern off these and something to trade, then there's a trade opportunity there. But if not, no problem. Okay, so we got the rejection in the end, came back down. We had all those longs closing out, but we failed to get any follow through. So I was looking at another stab up. We did get another stab up, which came into the 886. And then we got a nice rejection once again. We got some decent longs up here, all trapped when price reversed on them, but we didn't change any market structure. But by this point, I'd logged off because I had a pretty bad man flu last week. The guys in the group will know about this. So I logged off, and in the end, I got stopped out through the night. Absolutely fine. So 1 hour lost. So that's going into the week. Down 1 hour, not the end of the world. Okay, so then this moves us into Monday. Okay, now Monday was the fun day, 'cause instantly we had a move up on Monday open, and then obviously we had a retrace, and then we had another move up. So first I'm going to talk about Monday morning. Okay, so this is before I did the update for the guys. I'm coming in and I'm spotting that we've got a potential double distribution day play. Okay, so I had taken a scalp short from this level, which was based on an old SR level, which I was happy to short from. Again, we did have a lot of buying at the top of this, loads of excess, got in on the retrace, taking a scalp short from the weekly. Note where the point of control is though. Inside the single prints, so that would need to be lost to give the double distribution day setup. Okay, so we're looking at this on the 15-minute chart here. We can zoom in and see this a little bit more clearly. So what my overall trade idea was is getting on the retrace, which I did, and then taking it back down to the origin of the move as a double distribution day play. However, with the take profit 1 firmly at this point of control at the top of the single prints, when you're trading a double distribution day like this, which we've had time and time again. Once again, for those that don't know, this is what I'm referring to as the BART pattern, as it's most commonly referred to. This setup has played out a hell of a lot of times over the past 6 months. In fact, anyone that watches our channel week in, week out, you'll see that we've traded this many, many times. And now, the last 2 times, it's actually failed. Okay, but that's fine because we had a take profit 1, stops to entry, and then in the end, we got stopped out on the move up. Okay, so this is where it came down to. Came into the top of the single prints, hit that point of control, and then reversed. So if I'd have taken 100% profit of that, I'd have got just over a 3-hour trade. In the end, I didn't. I only took 50% out of that because I was looking for that full rotation down. Okay, so therefore, just over 1.5 hour trade. Not the end of the world. Still happy days. Didn't lose any money. Now, we're now moving into Monday afternoon with the big move up. Okay, with the big move up. So this is a trade that we've been planning since, you can see here, this is from one of our chat and chill streams. This is going back to 29th of August 2023, which is effectively back here. This is when we were looking at this level. Now, anyone that's in our members know how our chat and chill streams work. I map out my high time frame and low time frame trading plans for the guys, and I tell people what I want to see at each area. Okay, so that's the key with this. So this has been a level, even though the price action hadn't developed by then, this was an area that I was interested in taking out these highs. So now, what I want to do is I want to talk you through this, because I think this is worth talking through. So, first and foremost, here's a snip from the Monday morning's update for the members, and you'll see here what I'm talking about, and this is, again, I've reiterated this on every single stream that I've done for the members. If we do come up into this zone, then I don't want to spend much time tapping this 1-to-1 before a quick rejection. Okay, so you heard there that I didn't want to spend much time at this level. Okay, now here's my thought process behind this whole move, and hopefully you guys can learn something out of this. So I've been saying for quite some time now that this area here, once it pops up, there we go, this area here is a sticky zone. Okay, this is a sticky zone, and every man and his dog is looking at this sticky zone. Okay, now why is it a sticky zone? Well, number one, for me, the main reason is volume. We had several point of controls in here, naked point of controls. We also had old SR levels within this. Now, whether you are a Confluence trader, whether you are a Fibonacci trader, a Elliott Wave trader, an order block trader, ICT, any trading form at all, no matter what your trading style is, there were a lot of eyes on this area. Okay, a lot of eyes in this area. You know, if we can zoom in, we'll look at the daily. We can see we've got daily order blocks here. We've got 3-day. We've got 3-day order blocks, and they're kind of mitigated. We've got weekly order blocks in this, monthly, no, that's mitigated, but either way, we've got a lot of reasons within this. So you've got, no matter what style of trader you are, this is a sticky zone. So a lot of eyes are on this level. Okay. Now, the reason why I wanted a fast move up here is twofold, and I'm going to explain this now for you. Number one, we had all these highs. Now, again, they're not technically equal highs. They are still making lower highs all the way down, but there's liquidity resting above these highs. Now, this line here is a monthly SR level. Okay, so again, we have a monthly SR level here. Now, this is the reason why I wanted this to be quick, because if price action, and this is what I explained to my members, if price action came up here and started grinding around this level, okay, taking the liquidity of this without a harsh, significant pullback, the chances are this level would have been flipped. Now, above this level, we've got another thin zone here up into our last little volume cluster up here. Okay, so therefore, if we'd have spent time here, the chances are increased of price action spiking up into this last volume pocket or taking out the overall highs. So this is why my thought process is, and again, this was the same back on August when I did the chat and chill stream. It's the same words that I've been saying time and time again. This is a level that I'm interested in, but I need to see something specific. I've got to see price action fast into this move and not linger here. Okay? So other people will say, well, how did you know that the ETF would have been fake news and you're going to get a spike? I didn't. I'm not going to sit here and lie to you and say that I knew that something like this was going to happen. All I'm saying, and I didn't even know if this would come in fast. Okay, so this is why I'm not going to sit here and bullshit you guys and say I knew that this was going to come in fast into this level and reject. What I said, if you pay attention to that video, is I'd like for a trade setup price to come in here and not linger around before reversing. I didn't want price to linger. So therefore, if it didn't linger, there's a trade setup. If it lingered, there was no trade setup for me. Okay. So it's not all about the levels that I'm interested in trading, but it's how price comes into those levels. It's all to do with context. And that's something that I teach. And I'm very firm on how I teach this in the group. Okay. So the other confluence that we had up here, just as an FYI, and obviously what I talked about on that morning update that you could see here was a 1-to-1. So you guys knew that we had a 1-to-1 which caught this short here in the first place, which was this low to this high to this low. We had this perfect 1-to-1 which gives us a great short trade down to the lows. Now in the end, these lows did hold, which in turn created a new channel. Okay, now anyone that follows us knows that we are big into our Elliott Wave channels. Okay, we had a channel in play. Okay, so therefore what I'm seeing now in terms of Elliott Wave is I'm looking for a connecting partner leg to this move here. Now, what did we get in the end? Well, if we use that same Fibonacci extension from the low to where this initial 1-to-1 was, back to this new low, we had this zone here. Okay, so we had this 1-to-1, we had a naked point of control up here, we had a monthly SR level up here. Yes, it didn't go this high on other exchanges. Okay, not all exchanges are equal, and that's absolutely fine. A lot of it comes down to liquidity, leverage, etc., etc., etc. I'm not going to give you that lesson today, but this was the reason why I had confluence up here, and this is what I was looking for. But it had to move fast. If it didn't move fast, I wouldn't be interested in taking that trade. If we'd have come up into this zone, my initial sticky zone, and we'd come up into this and lingered around in here and then started to break some structure, I would have happily taken shots within this, just like every other man and his dog. But once again, I reiterate, when all eyes are on a set level, price is either going to front run it or blast straight through it. Next best example was this high back here. All eyes were on this level, this liquidity getting swept. All eyes were on this. Okay. In the end, what did we do? We front run it. Okay. So this is typically what happens when you're trading. A lot of eyes are on a certain level. It'll either front run it or go straight through it. What did this do? It went straight through it. Then it reversed. Okay. So I am currently still sat in this trade. We'll zoom into the 15-minute. We can see this. We came back down. I'm still sat in the trade. I had a take profit 1, stops it to entry, and now I'm comfortable no matter which direction it goes. Obviously, we do have a sideways range going on here, and we'll wait and see which way it breaks. Okay. Again, I'm not trading the breakout. If you guys obviously want access to the real-time updates and obviously the plans from our chat and chill streams, where you can actually see my thought process behind not only what level I want to trade, but what I want to see at these levels to take a trade, then first things first, come over to our website, spitfiretraders.com. access to our free Discord here. And then obviously if you do want access to our private group where I do share my daily plans and you get access to all the educational content as well, then click on the Join Us tab and it's right down here. Now we've still got the Trial 25 promotion going. So therefore, if you want access for a month for just £25, then at checkout, enter the promo code Trial25 and then you'll get your first month at 25 quid. If you like it, you're more than welcome to stay. If you don't like it, no problem. You've only lost £25, okay? So obviously within that, you'll get access to our modules. So daily trading plans, you can see there, we've already done this morning's trading plan here. And obviously all the chat and chills, which is the more high time frame stuff and some low time frame stuff. And then you get obviously access to all the modules, okay? Including obviously the Elliott wave, which was a big factor in why we took that trade, okay? So that's where we're up to right now. So let's just, let's hide some of this stuff. Let's get rid of this and let's get rid of this volume profile. And now we can talk about what's to come, okay? What's to come. So first and foremost, let's throw this top range back on because this is still important because we are still within this range, okay? Let's zoom out to the daily so we can see this a little bit better. And obviously we've got the bottom range again, like we've been talking about for a long time. We have been talking about these two ranges for a long time, and they are still in play, as you can see. Okay, this is the reason why I keep saying to you guys, these are the only two ranges you need on your chart from a high time frame perspective. So, what's my plan here? Well, obviously you guys know I am short from here, and I consider that this could be a swing short. I could be wrong, and I'm happy to be wrong, and I'll hold my hands up, it's not a problem. I'm still swing short from higher, which is an old trade position from Bybit. Obviously I'm in the UK, I can't trade on Bybit anymore, so that's just still running. And I'm still long from the range lows, well, in fact, the old macro range highs. Okay, so I'm quite happy being hedged here, so I don't really care which way the price goes. But for newer trades, if, again, we'll start with the upside first, if price starts to come back up, okay, to effectively backfill this wick, which does happen. It's a very common practice in trading. If we do start to come back up, we take out the highs of this wick, then once again, we've got the range highs. Now, if we do come into the range highs, do we get a straightforward rejection like this? In that case, wait for the sign of weakness, then get involved on your market structure break, and I'll be looking to short this back down, okay? If that doesn't give us anything and we head up higher, break out of this range, then the likelihood is we start to contest these highs. So once again, do we get a straightforward swing failure pattern followed by a reversal, or do we look higher prices? If we're starting to look at higher prices, then first and foremost, this level here then does come into play. The one that I've just talked about got front run, which is roughly around 32.3, 32.4. And if that offers nothing, then we can start looking up towards the 38, 40k region. Okay. Now, what happens if this just rolls over? Well, if it just rolls over from here, first and foremost, we've got the range lows. Now, the range lows are pivotal in this because, as you can see, on a daily time frame, this is what's holding structure up. So, if we come back down to range lows, do we get a nice clean reaction and a market structure break to the upside? Then we can get involved in longs. If that doesn't give us anything and we start taking out these lows convincingly and losing the range lows, then we can be looking back down towards the old macro range high again. Now, at this point, once again, I'm going to be quite specific in what I want to see, and the members will know this, but we've got liquidity resting here. Now, I know we've got this wick on Bybit, but on other exchanges, this doesn't exist, so let's pretend it's not there for now. And we've got the last volume support here, so if we do get something along those lines, then we've potentially got a trade set up. If not, then we're going to be back to trading this old macro range, with a key focus, obviously, on the EQ, these lows, and the overall June lows down here. Okay, so it's the same plan. It's the same plan. You don't need to overcomplicate these things. Okay, so upside, range highs, downside, range lows. See if this range holds or breaks. If it breaks, then we'll look for higher targets. If it breaks to the downside, then we'll look for lower targets. Very simple, okay? Hopefully you guys have learned something there and understand my thought process behind this trade in the end. If you have, hit that like button. If you're not subscribed, consider subscribing. And until next time, gang, as you were, bye-bye.